You're about to hear a rebroadcast of Where We Live. It originally aired October 29th, 2019, here on Connecticut Public Radio.
This is Where We Live from Connecticut Public Radio. I'm Lucy Nalpathanchel. Towns and cities often struggle to encourage investors to develop in low-income communities, but the federal tax overhaul enacted in 2017 provides incentives to investors who take a chance in these areas, known as opportunity zones. Today we learn more from the State Department charged with promoting economic development in Connecticut, known as the DECD. We'll also hear from towns in the eastern part of the state that have designated opportunity zones. How do they compete with larger cities in attracting investors? We'll find out later. First, we wanted to learn more about this federal initiative, so joining me now by phone is Margaret Anadu, head of the Urban Investment Group at Goldman Sachs. Margaret, welcome to the show.
Thank you so much for having me.
So if someone is not involved in economic development for a municipality, if they're not an investor, they may not know what an opportunity zone is, Margaret. So let's start there. What exactly is the Opportunity Zone program, and then how are these areas designated around the country?
Sure thing. So as you mentioned at the outset, so this was part of the 2017 tax overhaul. I think it surprised many folks, was sort of tucked in there. And what the program did was it allowed governors around the country to take a relatively short period of time. It was only a few months to select 1/4 of the low-income communities in their state and designate them opportunity zones. So starting with what a low-income community is, so these are areas where the poverty rate is 20% or above, or the income levels of those individuals and families relative to the broader area is only 80% of the median or below. So governors, took their time and selected their zones, and we've come up with close to 9,000 opportunity zones around the country. And, just to share a little bit about what these census tracts look like, 75% of them are in metro areas. They're home to 10% of the country's population, so that's roughly 32 million people. And just to give you a sense of the level of distress in some of these communities, homes in an opportunity zone relative to, just the average census tract around the country are 50 years older than the national average. Another kind of telling stat, 38% of adults in opportunity zones are not working. So these are places that are certainly in need of investment and in need of capital.
Now, Margaret, I just want to let our listeners know that coming up, we're going to hear from David Corus, who's Deputy Commissioner of Connecticut's Department of Economic and Community Development, who's going to tell us more about the specific zones in our state. I didn't mean to interrupt, but I wanted to ask you, when we think about the tax overhaul and, how exactly does this work to try to get investors interested in these opportunity zones?
Absolutely. So past the selection of the zones, then the next step is how do you get that capital to flow? And so the intent of the program was to take capital that has long been sitting on the sidelines and incentivize it to invest in a long-term way in these underserved areas. And so the kind of bucket of that capital that was selected was unrealized capital gains. And so just to put a number on that, there are many that estimate sort of unrealized capital gains in the country today at above $2 trillion. And so for investors, and this can be an individual or a corporate, family office, who basically realize a gain and take that capital and invest it into one of these opportunity zones, they get three pretty substantial tax benefits. So the first one is that they don't have to pay that original capital gains tax. So let's say, you've acquired a good amount of Apple stock. If you sold that and did not invest in an opportunity zone, you'd pay a pretty hefty tax bill day one. And so by investing in an opportunity zone, one of the benefits is that you have more capital to invest because you're not paying that tax day one. The second benefit is that if you hold that investment for 5 to 7 years, you also get to reduce that original tax that you pay in 2026. And then the last benefit, which we think is the most substantial, both from an economic perspective and an impact perspective, is that if you hold that investment in the opportunity zone for 10 years, you don't pay any capital gains tax on that investment. So it has this dual benefit of incentivizing folks to really invest in a patient way, so to really hold for 10 years, but then also giving that economic incentive in not having to pay that final capital gains tax.
So, Margaret, obviously investors can make money from this investment if they hold on to it for at least 10 years, as you mentioned. But when we drill down to local communities and the people who live in these communities, what are the benefits to them if you have these outside investors coming in looking to either build mixed income housing or to open a business?
Yeah, so the benefit is getting that capital. So I don't want to go back too far in time, but if you look at the opportunity zones, there's significant overlap with the exact same communities that the government redlined dated back to the 1920s and 30s. So these are communities that have not benefited from new housing at the same rate as other places. They've not had the new construction of strong schools. They've not had capital coming in to invest in starting new business and growing new businesses. So the real benefit to the communities is the capital in and of itself and getting that new development through capital and getting those businesses. Now, you use the word outsiders, which is I think it's a real trigger in these conversations. I do not think it is going to be the most beneficial for the structure to be that outside capital sort of flows into these communities without the clear direction and participation of those communities. So there's no one who knows better what is needed in the outskirts of New Haven or central Brooklyn or the Ninth Ward in New Orleans, other than those residents and those community organizations who've been in those communities for decades.
And so who then takes that role, that lead role? Is it, say, the state of Connecticut? Is it the local municipal leader who makes sure that if there are particular projects that will be invested or come to a particular neighborhood, that it's good for local residents?
So we've seen, I first say it takes a village, all of those people, and we've seen different models across the country. So one thing that we're noticing as we're meeting with economic development agencies and housing agencies around the country is there are a lot of entities that are playing some catch up. So we've been investing in low income communities really prior to this incentive for almost 20 years, and so there are many municipalities and places around the country where folks are pretty organized. There's a great kind of communication, collaboration among community organizations, city-level government, and state-level government. And there are places that are really, developing those muscles now. And so I think where we've seen it work the best is when you have really government at the city level. And so that's City Hall, the local city housing agencies, the local economic development agencies working with the private anchors in those locations, so whether it's the educational institutions, the healthcare institutions, and then the existing business community, all of those entities working together with a direction and strategy that is delivered from the state level, given that the state, right, was the entity that kind of selected the zones, across the entire geography. And so you really need to see all those pieces come together, and it really depends on the need. So, for example, there are many of these communities where housing is a real challenge. So I'll just give an example. Downtown Newark, right? A lot of downtown is an opportunity zone. Prior to just, 5-6 years ago, there hadn't been new construction built in downtown Newark since the 60s. And so you can imagine in that conversation, the housing entities at the city level have to be at the table. And so it really just depends on that local opportunity zone and its challenges.
Again, on the phone with me is Margaret Anadu, head of the Urban Investment Group at Goldman Sachs, as we take a look at what opportunity zones are here on the show around the state of Connecticut and the country, part of the 2017 tax overhaul law providing investors incentives to invest in distressed communities, low-income communities. You can join our conversation. Find us on Facebook and Twitter at Where We Live. I wanted to take a quick call. Pat's calling from New Haven. Pat, you're on the show.
Thank you for taking my call. I wanted to just note that in most communities in the state, there was very little public process, and so the designations were handed out before people in neighborhoods even knew it, and some neighborhoods that could really benefit from it were left out, And with the historic tax credits now also taking opportunity zones into account, it's unfair, it seems to me. And so far, last time I checked anyway, there wasn't any kind of second round opportunity for neighborhoods to try to get themselves included. So it's just, as your guest was pointing out, neighborhoods matter. And, looking at who was included and who wasn't included in terms of the historic redlining and poverty, it's unfortunate.
Well, Pat, thank you for raising that point. Margaret Anadu, again from Goldman Sachs, head of the Urban Investment Group. Did you want to respond to Pat's point?
I did. So I'm sure David, who will be on later, can kind of comment about the specific zones and how they were selected. But one thing I'd like to say to Pat, and I think this happens, unfortunately, every time there's a significant new incentive, and this, of course, it's the largest kind of federal-based tax incentive in decades, is that it's one tool. I'm very excited about opportunity zones. I'm excited about anything that's going to drive more capital into these communities. But at the end of the day, there are many low-income communities around the country, right, a full 75% of them that were not chosen. And so we can't take our eye off the ball in terms of focusing on communities across the board. And so whether it's, new markets tax credits or, just mission-driven equity and, Community Reinvestment Act-driven capital, there are many other sources of capital that are available for communities across the board. And certainly within many of the mission-driven lenders and partners and institutions that we work with, we're also trying to pay attention to the fact that we can't forget about the low-income communities that are not opportunity zones. And I think that's really important.
Well, Margaret, I wanted to ask, when we think it might be something that's common when you think about low-income communities, people may think of parts of cities like Hartford and New Haven. But then, what is it about this program that can really entice an investor to look at a rural community not very close to an urban area because maybe it's more desirable to look at a city versus, say, Eastern Connecticut, which we'll be talking about later on today on the show?
Yeah, so we've been thinking a lot on our team. We've been thinking a lot about sort of the intersection of kind of rural poverty and those challenges with opportunity zones. So, I want to be upfront. I think one of the challenges with opportunity zone investing, and I think investing period in rural areas, is the scale. One of the problems with the investing community broadly, everyone loves a large transaction, right? You're going to spend the same sort of amount of effort and structuring and diligence on, a $50 million deal as you do on a $1 million deal. And so I think that is one of the reasons that investment often gets driven to urban areas where deal sizes are just larger, costs are higher, and so you can put more money to work. What I will say is I think there's a real opportunity, no pun intended, with opportunity zones in rural areas as it relates to infrastructure. So we've seen a lot of really exciting opportunities with broadband where, some of these things can be larger deals that can impact a large rural area. And then when we talk about the 10-year hold period, some of those infrastructure investments really lend themselves to a longer hold period. And so I think there's some really exciting opportunity there in the infrastructure space.
And Margaret, before we let you go, I'm just curious, again, this is part of the 2017 tax overhaul law that went into effect. So how have investors been responding?
So it's been, I would say there's been just a whole host of interest from all kinds of investors and fund managers. And I think there's been a lot of press around how it's moving slower than people thought. I think one thing for people to keep their attention to is the fact that this is still relatively new, right? When you think about capital formation, first they're just understanding the structures and how the funds can actually work. And it was only in the last few months that I think we got a round of regs out of Treasury that really answered a lot of the questions. And so I think there's been a lot of excitement and focus, but less activity on the ground. We had a really kind of great advantage in that we've been investing in these communities, these same communities for 20 years. And so we've closed 12 opportunity zone funds, the majority on balance sheet, and also starting, to have our third-party client capital because investors have really been just reaching out to us with a lot of interest. I think we're just really at the start of the program, and I think the investor interest to date has been very encouraging.
Margaret Anadu, again, is head of the Urban Investment Group at Goldman Sachs, giving us a primer on what exactly opportunity zones are. And we thank you, Margaret, for joining us today.
Thank you so much.
This is Where We Live from Connecticut Public Radio. I'm Lucy Nalpathanchel. Coming up, we're going to learn more about opportunity zones in Connecticut and hear from local economic development officials about their efforts to attract investors to low-income communities. You can join us, too. Find us on Facebook and Twitter at Where We Live.
You're listening to a rebroadcast of Where We Live. It originally aired October 29th, 2019, here on Connecticut Public Radio.
This is Where We Live from Connecticut Public Radio. I'm Lucy Nalpathanchel. Our last guest, Margaret Anadu, says 10% of Americans live in low-income areas where unemployment rates are high and economic growth lags. The federal tax overhaul in 2017 attempted to address this in a program known as Opportunity Zones that aims to encourage people like real estate developers and venture capitalists to invest in these areas and in return receive tax breaks. We wanted to learn more about the specific opportunity zones in Connecticut. So first joining us by phone is David Corus, Deputy Commissioner of Connecticut's Department of Economic and Community Development, known as DECD. David, welcome back to the show.
Great, Lucy. Thanks for having me.
So tell us more about Connecticut's opportunity zones. When we look at the map of our state, where are they located?
Sure. So there's 72 census tracts that are designated as opportunity zones, and they're in 27 municipalities. They're in every corner of the state, from Stamford and Norwalk in the southwest to New London and Groton in the southeast, several in the capital region, and some in northeastern Connecticut in places like Putnam and Mansfield. We were eligible to select up to 25% of the zones that met the socioeconomic characteristics established by the federal government, and we worked hard to do so in places that were aligned with our other objectives, like transit-oriented development and waterfront recapture, and near our anchor institutions, like Margaret mentioned, our universities and hospitals and higher education.
I'm not sure if you heard the caller in the previous segment who felt that the way the state designated opportunity zones, it left out certain communities in need. How do you address that concern? Also, she said that there wasn't any public input to that process.
Yeah, so I did hear that question, and I'm glad she asked, because there's been a lot of questions about sort of how they were selected and whether there's opportunity for more. So first and foremost, the way the process worked in the prior administration was a solicitation was put out to all municipalities that had zones that met the socioeconomic characteristics. We received applications from the vast majority, and they prioritized. So the municipalities each identified the census tracts within their communities that were eligible that they wanted designated. We then worked off of those priorities to select the most that we were capable of selecting under the federal rules, which was 72 tracts. So it was really up to the municipalities, and I know that some did have a public process associated with that, others didn't, but the state was really reliant on municipalities to garner that local input in setting their priorities. In terms of designating more, we are hopeful that over time the success of this incentive leads to congressional action, which would allow for further designation. But until there is another bill through Congress, we are limited in the number with those that are already designated.
And so I'm curious, with these designations, again, has there been movement? Are there particular investors looking to at a particular opportunity zone now in Connecticut?
Yeah, so there's a lot of activity. There's been, I think things have moved slower than people had hoped or anticipated, largely due to the pace at which the federal guidelines and regulations have been coming out and been finalized, and investors don't like uncertainty. So the more certainty exists through the way in which the federal government and the Treasury and the IRS are going to treat this, the more likely we are to see activity. But there's a lot of people looking, and there's a lot of interest, particularly, as I said, in those communities that have a clear vision for where they want to go. And that's one of the most important points that I want to make sure to make today, and it goes to your earlier conversation about public input and whether or not outside investors are aligned with the vision of the local community. At the end of the day, all of these developments and all of these investments and business opportunities are still subject to the same local regulation that any other project would be. So things like zoning still govern what can or cannot take place in municipalities. So we've been working closely with those 27 municipalities to make sure that they're engaging their local population and local stakeholders in crafting a vision for the future of their community, investing in infrastructure that helps realize that vision. And in that regard, opportunity zone investment and opportunity fund investment taking place in their communities is a key implementation tool to help them realize their vision. So no one can kind of come in from outside and develop a project that isn't locally desired, because it's through the participatory planning process and through local regulations like zoning that we can still govern how development takes place within our communities.
That's David Corus, who's Deputy Commissioner of Connecticut's Department of Economic and Community Development, as we learn more about opportunity zones. Again, distressed communities where they're hoping to take advantage of a federal initiative out of that 2017 tax overhaul law to attract investors to those specific communities. David, you've mentioned municipalities several times. Let's bring in a couple for their perspective. First, Jim Bolano, Economic Development Director for the town of Windham, Connecticut. Jim, welcome to the show.
Thanks, Lucy. Thanks for having me on.
Also with us is Paige Bronk, Economic and Community Development Manager for the town of Groton, Connecticut. Paige, thanks for joining us today.
Thank you, Lucy. Thanks for having me.
So I'll start with Jim. Tell me more about, again, efforts in the town of Windham. Again, you are designated as an opportunity zone. And so what about this program are you looking to see happen in your particular community? And, has it been a slow go for you?
Sure. As David mentioned, there's 27 municipalities that have opportunity zones in them. So the opportunity for all those towns will depend on what's happening in that town. For Windham, it's the opportunity zone really lies in our downtown or historic Main Street area. So that's going to translate for the most part into a housing opportunity, and that's where we've seen the most activity. We actually do have a developer coming in looking to leverage opportunity zone funds to do a major project downtown.
And when you say a major project, what do you mean? Can you tell us more?
Sure. His vision is to do a total of about 415 market rate housing units downtown in 5 phases. In the short term, he has 2 phases, and he's already been through planning and zoning on both those projects, and that's going to amount to 2 separate locations, about 200 units, mainly geared at undergraduate and graduate students at Eastern Connecticut State and UConn.
That sounds like a good project. I'm just curious, when we think about, again, people who live in particular communities for a long time, one, economic development is good to hear that market rate is coming in. But what about concerns about pushing out people who've been there for a long time, who may not be able to afford to live there, depending on how successful this development project becomes?
Sure. Well, in Windham, we kind of lie in a unique position. I think we are the 3rd largest community as far as affordable housing. We have about 29% affordable housing in Windham. So from that perspective, we've always embraced this idea as being kind of an urban hub in Eastern Connecticut, and therefore we are a central location for social and human services. We do embrace that role. But on the other side of that, we do need growth, and we need to grow our grant list because we do have a large not-for-profit presence. So, at 29% affordable housing currently, we think we've done our part in that respect, and so market rate is something that's imperative for Main Street revitalization.
Paige Bronk again is with us, also from the town of Groton, the Economic and Community Development Manager. So tell us a little bit about your opportunity zone and what you're hoping to bring to Groton, Paige.
Sure. Somewhat piggybacking on what Jim had mentioned and also David, we had applied to the state and were fortunate enough to be selected to have one of our eligible areas be designated as an opportunity zone. We clearly are a job producer. We have Electric Boat, Pfizer, the sub-base, but simply because we have a strong workforce doesn't necessarily mean that we've yet closed the loop economically. We do have demands. Similar to what Jim mentioned, we also have a high percentage of subsidized housing units at about 21%. So when we talk about the need for housing these days, really it deals more with market rate housing to try to satisfy the demands of our younger growing workforce that would be at Electric Boat in dealing with submarine production and also Pfizer and others. We have about 80% of our jobs are held by commuters these days, which is a real concern for us. We'd like to diminish that, decrease that number so that we can close the loop. Housing within our opportunity zone is definitely a large push, mixed use, and also retail.
But how do you get investors interested in Groton, so to speak? Because it is on the eastern part of the state, and you mentioned that there are, obviously EB is there and the sub-base is there, but trying to get investors interested in bringing their projects to Groton.
Yeah, we identified a few years ago that Groton probably is not really on the map. We've spent a while trying to do a better job in branding and marketing and getting our name out so people can identify with the community. We do a lot of trade shows outside of Connecticut. We have a lot of marketing material, a new website, exploremoregroton.com. So We've done a pretty good job with that. We have some local incentives. The state has incentives. So the opportunity zone is another layer, another tool that we can put in the toolbox in trying to do matchmaking with interested investors. So the state has taken the lead in trying to attract investors to opportunity zone areas. I think our local and state collaboration in conjunction with all of the tools and incentives, that is probably our best bet in working with these investors who are looking for key opportunities.
That's Paige Bronk, Economic and Community Development Manager for the town of Groton. Also with us on the phone is Jim Bolano, who's the Economic Development Director for the town of Windham, Connecticut. Jim, we talked about some of the projects, this developer who's interested in market rate housing in the town of Windham. But I'm curious, what else do you want to see from the state of Connecticut, particularly the DECD, in terms of helping municipalities really get the most out of this particular program, this Opportunity Zone program?
Yeah, I'm glad you asked that. The state is actually doing exactly what it should be doing in this context, because remembering that the Opportunity Zone incentive is really a private incentive. It's individuals trying to defer and excuse capital gains through the federal tax code. So the state's role is ancillary, but what David and DECD are looking to do tomorrow, for example, in a forum in New Haven, is to get investors and developers together. And they're also, I don't know if he's spoken about it, but they're launching this website where you'll have mapping and listings of opportunity zones in the state. That's an important role for the state to kind of harness and be a centralized location for that information. Otherwise, what you have is you'd have, the 27 towns out there kind of on their own trying to do this. And as Paige said, we all do our best efforts through marketing and trade shows. But to have the state as a partner is really key because the dollars are so large and these funds are national that if somebody can come in to the state of Connecticut and look at a central location, that's going to make our job a little easier.
Again, you're hearing from the town of Windham and also the town of Groton here on Where We Live. If you live in those particular towns, and this is the first you're hearing about opportunity zones, I wanted to go back to David Koros, Deputy Commissioner of Connecticut's Department of Economic and Community Development. David, I'm curious, with all of this attention on opportunity zones, it does seem like a no-brainer that municipalities and the state should try to make use of this federal initiative. But also, I'm curious how this plays into, is it a new strategy from the Department of DECD? In previous administrations, getting a lot of flack for giving incentives to companies before their promised jobs come to fruition. I'm just curious if you could talk more about if this is a new strategy for DECD.
Yeah, so this is just a new tool in our toolkit, essentially. And as you mentioned, under Commissioner Lehman and Governor Lamont's leadership, we are transitioning our approach to economic development away from some of the types of incentives that we used in the past to new types of tools that are more performance-based and more delivered, following the production of jobs. And so this is just one additional tool that essentially the federal tax code has bestowed upon us that we can add to that toolkit when we look not only to grow and retain and attract companies, but to do so in places that are of statewide significance and places that may have been lacking external investment or capital mobilization over the last several decades.
For people who live in Connecticut who may not actually live in an opportunity zone, this may be music to their ears because it's not state taxpayer dollars being used to incentivize businesses to come here, David.
Correct. Yeah, this is, as Margaret mentioned in the opening segment, this is an attempt by the federal government to mobilize the potentially up to $2 trillion in capital gains that have been essentially sitting on the sidelines, and to direct that to the communities that are most in need. And one of the most important things that we can do in that effort, given that the benefit is greatest if you invest in these communities for a minimum of 10 years, as Paige and Jim were describing, is to really tell the story of Connecticut and its communities and make that case that in the 2040s and 2030s, our communities will be of greater value and provide greater prosperity to their residents than they do now or in the 2020s. So this is a long game, and one in which we're looking for opportunity funds to be our partner in bringing capital to the state to realize the visions that our communities already hold for how they can be of greater value to their residents and their businesses in the coming decades.
I'm curious, David, if you could talk more about how this program is regulated. When this was first brought up, when Congress and President Trump's administration was looking at this tax overhaul, there was concerns about, is this a program that's just going to serve as another tax shelter for wealthy investors?
Yeah, so this is, a continuing concern, to be frank. We don't yet know the scale of kind of reporting and metrics that are going to be required. We're still awaiting those federal guidelines, but that's important because we want to make sure that these investments are having the kinds of co-benefits, social, environmental, and economic, in the communities in which they take place that they were intended to. And if they don't, we don't want to advocate for the continuance of this program. And if they do, we want to make sure that it expands so we can designate 72 more zones within our state. But from our perspective, zoning and the state regulations are the best tool that we have available to ensure that the capital that does flow to our state is doing so in the kinds of projects that we want to see in our communities to best elevate prosperity and social equity and environmental quality.
We're getting some good comments on social media from our listeners. I want to first go to Brian. He writes, I live right between Windham and Groton in Norwich. Been here for 30 years and always thought we never tapped into anywhere near the potential Norwich has to offer. And he wants to know if there's any plans for Norwich coming down the line. What can you tell us, David? And maybe I can also go to our other guests if they've heard of anything because of where they are located. First, David.
Sure. So first and foremost, I just want to make clear that Norwich is one of those 27 municipalities, and they have 3 zones within their community, and so they have the opportunity to capitalize on this new tool, and that was afforded to us by the federal government.
Can I go to, Jim from Wyndham and Paige from Groton? Let's start with Paige first.
Sure. The first thing I thought of was that Norwich is on the Thames River, and we have focused on the Thames River Innovation Place, although there has been initial focus on Groton and New London as a part of that innovation place. We have often discussed Norwich and how we want to do a better job in including them with the growth in the region. And the last comment I would say on that front is regarding co-work space, and Foundry 66 is definitely something in Norwich that people are proud of. Here in Groton, we have BioCT Commons, which is another incubator co-work space, and we have an idea of trying to create one in New London as well. So we don't look at each one of those co-work incubator spaces as one-offs. They're very much a part of a system, and we need Norwich as a part of that regional system to help drive our economy in this area.
And Jim Bolano, who's with us from the town of Wyndham, Connecticut. During our coffee break, we learned that Willimantic is part of the town of Wyndham. Any, interest in maybe expanding opportunity zones to that part of Willimantic, Jim?
Sure, and David makes a good point. And this is a census year, and so there is an opportunity to kind of adjust the census tracts at the census time. Censuses are kind of arbitrary; they're based on streets and population, and they're not a perfect set. So we'd like to maybe adjust our census line in the short term to include a property that's right next to where the opportunity zone ends. But in the long term, I think if we do expand opportunity zones, I certainly have 1 or 2 tracts that meets the criteria that we'd like to add in.
I wanted to go back to David Corus, Deputy Commissioner of the Connecticut Department of Economic and Community Development. Christina tweeted at us and wants to know more about the efforts to develop without destroying the historic fabric and feel of the Connecticut town. Opportunity zones can help with that, but we also need to encourage preservation. So can you talk about that concern from people who wonder what can happen to historic parts of their community when there is that interest in investing?
Absolutely. Preservation is very important to us. It's the historic fabric of our communities that adds a great deal of their value, which make them so attractive places to live and to work. And one of the immediate things that we did in early legislation this past spring upon better understanding the Opportunity Zone incentive was increase the value of tax credits, historic tax credits, when done in Opportunity Zones, and to target specific allocations to them. So additional resources are available to ensure that when Opportunity Fund investments are taking place in communities with great historic character, there's even more state resources available to rehab historic properties alongside.
Jim Bolano, you mentioned earlier a developer interested in the Main Street area in the town of Wyndham. And so how do you balance concerns from maybe some in your community that they don't want to see historic buildings have to be razed, but in fact trying to incorporate that with the plan?
Sure. And we had a specific instance of that because one of our projects involves 2 historic buildings on Main Street called the Hale and Hooker Hotels. And, our district is a strong historic district. We have many buildings, something like 42 that have been maintained since the 1980s. But, there is a tipping point sometimes when buildings become underutilized or quite honestly in dangerous condition. You need to have a change. So I think we need to have balance, and I think we've done that in town with this latest development. The one building is going to be raised. It's taken down. It's in terrible condition, the Hooker Hotel, and the other, the Hale building, is going to be maintained. The facade and outstructure is going to be maintained for the development. So I think balance is the key, and I think we all have to be reasonable when it comes to that.
I want to thank Jim Bolano, Economic Development Director for the town of Wyndham, for joining us today. Thanks, Jim.
Yes, thank you very much, Lucy.
Also, Paige Bronk, Economic and Community Development Manager for the town of Groton, Connecticut. Paige, we appreciate your time.
Thank you very much.
This is Where We Live from Connecticut Public Radio. I'm Lucy Nalpathanchel. David Corus from the Department of Economic and Community Development is going to stick around for this next segment because we want to actually talk more about how other states are looking to promote opportunity zones. Is there something Connecticut can learn from New Jersey? Don't roll your eyes yet. We'll talk more about that after the break. You can join us too. Find us on Facebook and Twitter at Where We Live.
You're listening to a rebroadcast of Where We Live. It originally aired October 29th, 2019, here on Connecticut Public Radio.
This is Where We Live from Connecticut Public Radio. I'm Lucy Nalpathanchel. Now today we've been learning about efforts by the federal government to spur economic development in distressed communities. It's an initiative that was part of the 2017 tax overhaul law that allows investors to avoid some taxes if they fund projects in areas, low-income areas known as opportunity zones. We wanted to hear how other states are rolling this out. So joining us now by phone is Tim Sullivan, Chief Executive Officer of the New Jersey Economic Development Authority. Tim, welcome to the show.
Hi, Lucy. Thanks for having me on.
I should mention you used to be the Deputy Commissioner of DECD, and you left to return to your home state. Is that right?
That's right. So I didn't your little jab at New Jersey during the intro. I took a little personally, but I'll give since I used to be a nutmegger, I'll give you a pass.
Yeah, give me a pass. Thank you. So tell us about New Jersey's opportunity zones. We've been learning more about how Connecticut hopes to see this flourish. But what are you guys doing in New Jersey?
Well, so we're all over this. We've got the benefit of being the home state of one of the principal sponsors of the Opportunity Zone program, Senator Cory Booker. So we've been all over this, and our governor Phil Murphy became governor right as this program was rolling on. So this was an early priority for us in the administration. And we have about 169 of these census tracts across the state in about 75 different cities and towns spread all throughout the state. So we've got a big diversity of types of places where this is happening, from distressed urban communities all the way to rural communities. I'm sure that's similar to how the zones in Connecticut were allocated. One of the things we're really trying to do, and I think David talked about this in some of the prior segments, and it's not surprising we're both trying to do this, is really connecting sort of investors and project opportunities because there's an enormous number of potential investors out there, folks who have deferred capital gains who can participate in this marketplace. And there's no shortage of projects that need investment. But it's once you get below a certain scale, it's harder for those investors and projects to find each other. So we stood up an online marketplace, which I was casually referring to as sort of a Craigslist for opportunity zones, but is fancier than that, where municipalities and developers can list projects, and opportunity funds can list their attributes that they're looking for, and hopefully make some matches. That's one big thing we're doing. The other is capacity building. I think David mentioned this earlier as well. Helping our cities and towns get ready for this opportunity and market and showcase the opportunities that they have within their city or town is a big ambition here, because lots of these places have never seen this kind of investment opportunity before. And if they're not ready for it, might miss the opportunity. Keep using the word opportunity. That's what I mean.
What have been the challenges, Tim? We saw a story in Politico that reported on former New Jersey Governor Chris Christie's plans to raise as much as $250 million for real estate deals in these opportunity zones, but the efforts have gained less traction. Just wonder if you could talk about that.
Well, I think some of the uncertainty that still surrounds the program probably hasn't helped sort of turn the jets fully on yet in terms of the investment flows. So some of the rules and the transparency and the reporting things that David was mentioning earlier, I think we agree are kind of X factors that until those get clarified a little bit, I think some investors will sort of stay on the sidelines. And generally speaking, it's a new market. It's a new product. So we saw this, a decade and a half ago, 2 decades ago with the new market tax credit program. It takes a while for there to be sort of the habits and the routines and the processes that get built around a program like this to happen. And not everyone wants to be kind of the pioneers and figure this out and kind of go through the pain of working with lawyers and developers and investors to get this all documented the right way. So it takes some time, and I think that marketplace will develop, and success will breed success here.
Tim, as the marketplace develops, do you see that there's more interest from real estate developers?
Yeah, I think the early wave has been almost entirely, at least in New Jersey, has been, and I think this is true nationwide, has been far more focused on the real estate opportunity than the sort of the corporate or the sort of the venture capital dimensions here, which is somewhat disappointing. I think there's a huge opportunity to infuse growth capital into businesses that have been, family businesses that are neighborhood businesses in these communities where there may not be an opportunity to pass that business down. The second or third generation may not be interested in running the business anymore, and how are they going to find investors? This is an enormous opportunity. The rules aren't as clear and tight as they probably need to be, and certainly weren't initially. So that's been a bit slower. So real estate has been the big focus for now.
I wanted David Corus to respond, who's still with us, Deputy Commissioner of Connecticut's Department of Economic and Community Development. What do you think about what Tim's been saying about how the initiative is rolling out in New Jersey?
Yeah, well, I think Tim's right on. We've worked hard to collaborate with one another and with our colleagues, throughout the Northeast and throughout the nation, because, as Tim described, this is a new incentive and one in which the market is still trying to figure out, and frankly, the states are trying to figure out, given how different it is from typical programs where federal resources, flow through the state, and we have a very active hands-on role in determining how they get allocated to projects. Here, we're very much hands-off. We're very much on the sidelines. So we're trying to figure out how we can support the marketplace and steer it potentially towards the types of objectives we and our communities are looking to achieve, but without having the formal role that we would typically have in prior programs released by the federal government.
We just have a couple minutes left. We just got a tweet from Steve who writes, "These opportunity zones are exactly why I'm excited to be a commercial realtor. Great things coming to build up our communities." Is that the sentiment that you're hearing, David?
Yeah, so absolutely. We're seeing that kind of interest across the board.
Before I let you go, Tim Sullivan, again, Chief Executive Officer of the New Jersey Economic Development Authority. We had asked our guests earlier to talk about some of the concerns that may be raised from communities who hear about opportunity zones, including gentrification. How are you addressing that in New Jersey?
Yeah, I think that's something we're pretty focused on. We're very focused on as well. Governor Murphy down here has talked about wanting to reward folks who have fought and stayed through difficult periods in these communities, not replace them. And so I think that starts with being very purposeful and first of all, calling that by its name from the outset is really important. So we provided, the organization that I work with has provided some funding to municipalities to do some planning around what the communities really want to see. It's pretty unlikely that someone's going to, hop off an airplane and wander through a town in New Jersey or Connecticut and come up with a great idea that has never been thought of before for that community, whether it's a supermarket or affordable housing or whatever else. So communities need to have the resources to drive and determine what their vision is for these sites. So we think if we give folks some resources and a platform to determine for themselves what they really want to see happen on these sites and in these zones, we think we've got a chance to get it right. But it's for sure a real concern that we're laser focused on.
Again, I want to thank Tim Sullivan for joining us today from New Jersey, and David Corus, Deputy Commissioner of Connecticut's Department of Economic and Community Development. David and Tim, thanks for coming on today.
Thanks, Lucy.
Today's show produced by Lydia Brown. Special thanks to Jared Todd on the phones today. Our technical producer today was Carmen Baskoff. I'm Lucy Nalpathanchel. As always, thanks for listening.